Of course, you can't just blindly follow the calendar. Sell in September and go away has a better track record than sell in May and go away, but it's not exactly a rigorous approach to the market. There's not even any alliteration. That said, you need to be aware that tons of traders pay very close attention to what I'm about to show you. Very close attention to the seasonal patterns. And they're all gritting their teeth for difficult periods because of what I'm about to show you. Unless, of course, they're short sellers, in which case they're licking their lips in anticipation. Ordinarily, I wouldn't be too worried about this kind of thing, but when you layer in the Delta variant induced, look, it's causing a slowdown, let's face it. But you also have the fear of the Federal Reserve and the possibility of a debt ceiling debacle in Washington. September sell-off, let's just say it can easily become what I call a self-fulfilling prophecy. So first, let's circle back to the seasonal pattern and take a look at how the S&P 500 futures contracts have been traded historically. Here's what the seasonal pattern looked like 20 years ago. Yes, 2001. Using only data that we had from the year 2001. This is what Williams calls the true seasonal pattern. He points out that even back then, the charts were warning you that September would be a rough time for the S&P. Obviously, we had no idea, particularly how bad it would be, but it tends to be a dark period for the market, even when we don't get hit with a horrifying terrorist attack. 20 years ago, the seasonal pattern showed weakness in September, and it predicted that weakness would accelerate on 9/17. In retrospect, holding until the 17th would have been a mistake. But if you sold at the beginning of that terrible September, your portfolio would have sidestepped a lot of agony. The traders among you probably want to do that, or you might want to just lighten up and raise some cash. That's what we've been doing for the charitable trust. This is too compelling. How does the seasonal pattern look like today? Now we're going to look at 20 years of additional data to what I was showing. Check it out. This is what Larry's true seasonal pattern looks like today. It's incredible how it holds up. This is using numbers from 1998 to 2001 to the present. Honestly, the pattern hasn't changed all that much. Williams points out that the optimal seasonal sell point continues to be the same, around September 17th. Believe me, on the 16th, you're going to see a lot of selling because of what I'm showing you right now on the 17th. This is when prices tend to experience a precipitous drop. If history's any guide, there's a high probability this market will get hit with a meaningful decline at the end of this month, which is one reason it's been, I think, so soggy for the last week.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.